Hello, today is the 27th of September, and this is the daily chart for gold. And I want to talk about volatility as well, and I don't need a volatility chart to show the increases. For this one can show it as well. But before we get there, let's take a look at the pattern, how we encountered this uptrend that turned into a sideways consolidation, correction through time, followed by a price correction. The Fibonacci levels are from this low and this high. So it had a major pierce below. So this tells me we should have one of two things. One is that this trend would change because this is the Fibonacci mark I'd be looking for the changeover to occur. And it's not all that uncommon within high volatile times, which is what this is, to have major pierces below. For within silver, the 846 low from 2008 was a major pierce below its support line within that time frame. So the move would either be that major pierce below, this is an area of support, the by the book move would be a run up to the 1735-ish area, and then back here where it will find support, not a pierce below, but somewhere in the area of the 1630 level. And this is the only Fibonacci I can really use, within the exception of maybe its low, which was set at a little bit below 700. Therefore, I can take the high of 1692, excuse me, that's 692 on the downside, 1921 upside divided by 692. Now it's probably good to know what the 61% level is, which is a 38.2% retracement. It's unlikely that level is touched, although I guess I haven't checked the number. I'm not guessing it's 1540, but if it is, it would be a Fibonacci hit. But again, I don't know, and I don't think it is, but I could be wrong. So now what we'll do is we'll take this number and put it to the power of 0.618%. Multiply the low of 692, which gives us 1360 exactly. That's the key level of support within gold on the pretty decent long-term time frame to stay bullish. So it's still well above that level. Okay, so the next one is the 76.4. So if we bring the memory recall, which is high divided by low, which I didn't want to do that, and put it to the power of 76.4. That's a 23.6% downward retracement. And multiply it again by the low of 692, which gives us a level of about 1509. 1509. That's a pierce above. For that level is roughly around here. So it's a pretty decent size pierce. If we continue along further within Fibonacci levels, we can now take it to the, well, before I do that, I want to show you what the percentage I'm going to use, because the reason why I did 76.4 is because it's the opposite of this, and I'm just multiplying 61.8 times 61.8 times 61.8, so we'll do it again. That's 14.5, so that's 85.4 is what I'll do it to the power of. So we'll do 0.854, multiply the low again at 692, which gives us a price objective to 1655. That level is roughly where we're at. Now again, we can do another one above it, but this is the last one we're going to need, which is basically 91%. So we take the memory recall again to the power of 91%, multiply the low, 1752. And that level is roughly in here. So these will be some significant levels, and this 1752 coincides within this Fibonacci level as well. So that's the big mark that I'll be looking to see hold as a level of resistance. But when you really have confirmation that you're going to break through this and you hold the, what was the first number, 1400? The 61.8%, the 38.2% drop, or 61.8% retracement, holding that, then there's nothing more to state that the gains are now going to be continuing towards the upside. Now let's move on to volatility. And I don't need a volatility chart to show you that the size of these candles are nowhere near the size of these candles. It all starts pretty much right in here. The size of the candles from this point previous are much smaller than the ones from this point on. More things are happening, more volatility, something is brewing is the way I technically look at this. So if you're using a blind eye, meaning you have no idea what the nature of the economy is, but you understand the charts like this, you're setting up for something. And the trend would hope that would be going higher, because that's what it is. It's either a big move higher or this is the top. On a blind level, you would give much consideration for that, and even to the day within possible paper crashes, this could be also a top for a significant period of time, or depending on how long term, maybe insignificant period of time. We'll now finish this off within the long-term trend, and I just pointed out, you look at the size of a move from point A or from one point to another. We can do this again, and I'll draw a smaller line in here because this is a smaller chart. But I'd have to really draw the line somewhere amongst here, maybe even here. The size of these moves within the left side of the chart in here are by far much greater than in here, and even for that matter in here. There's only been a few big ones. This is their claim to fame, where the claim to fame on the big ones in here are much bigger than we're seeing today. Therefore, at some point, it could possibly change back over again, but in order for that to happen, we need to see higher volatility within the shorter term time frame, and well, obviously we're starting to see signs of that to be affected within this more super long term chart. This is a key area of support or resistance that's been support, and if we go like, well, anyway, I was going to do a comparison for just taking one side or the other, but it's just an extremely tight range right now. And that's that trend line that I just showed within there. I can make this a little bit bigger. So that's what I'm going to do. I'm going to zoom in a little bit because that'll be easier. Just looking for today's action. And we're almost there. Okay, there we are. So this is the current action, and if we draw a trend line, let's see what's the best that we can come up with. Really, this is the best one in here, and this really does show that we do have a decent amount of time to go to the top level, or we're in the middle of what most likely is a decent sized range. Now you could look at this, you see a level of support in here that was not support within there. So that's a decent trend line, but there could also be a lot of better ones too. If we connect back within this low, obviously that one's been taken out, and this is the one that it's breaking through here. So anyway, watch out, things can be exploding soon. and have yourself a great day. Bye bye.